Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Our telephone number is 888-713-2929. And I'm Jeff Barton, and welcome to the show. We do mortgages every week, each and every week on the show. If you want to get in touch with us, obviously you can use the phone number. There are a number of different ways to do it. Email, of course, info@malibufunding.net. Let's see, what else? Facebook. If you go to Facebook, type in Home Loans, Malibu Funding, Inc., and we pop right up. Malibu Funding is the sponsor of the show. The Mortgage Voice has been on the air for about 4 years. Really appreciate everybody who comes to the show each and every week. You know, we've been trying to corral everything we do at the Mortgage Voice and the Las Vegas Real Estate Show into a cohesive way by which we can try to deliver the message of these shows, which is, hey, local is better than national. Information about how you can use what we have on the show is better than having someone shout from the mountaintops or dictate down from MSNBC or CNBC or any other news channel that tells you exactly what to do and how to do it in a way that you don't understand and you can't really make use of. So what we try to do is boil it down, bring it down, just say, hey, we are here, we're local, we're in the Inland Empire, we're on KCAA, KMET, we're up in Tahoe at K-Tahoe, we're at the Roadrunner, we're at a number of different outlets in Las Vegas that you can see and hear us and get the information you need to have in order to make decisions that you're going to need to make. Because everybody knows that if you want to buy in this particular market, you better have some money. And you better have some money in the bank so that you can put a good, hefty down payment if you don't have a W-2 job. If you don't have a W-2 job that makes you about $100,000 to $150,000 a year, it's going to be difficult for you to be able to get a loan in order to get a house. Why? Because housing prices in the Inland Empire, believe it or not, are skyrocketing. And they're skyrocketing for a number of different reasons. One of the things that I looked at on last week's show was the way that a city like San Bernardino or Riverside or Rancho or any number of other cities in our listening area prevent housing from being built. Now, ostensibly, it's all done with a good reason. We want to protect the environment. We want to make sure that everybody has the proper documentation in order to be able to do a building, either 1 to 4 residential, maybe an apartment complex, maybe something larger, or they want to build a spec house. We want to make sure that all the bases are covered, whether it's your geology and whether it's the setback requirements, the building and safety requirements, all the things that are necessary to make sure that that particular city is satisfied with the way you're going to go about building your house or building a house that you want to sell to somebody who needs a house. But all of these things over the years have grown in complexity, have grown in the amount of work you got to do if you just want to build something and either try to sell it or live in it yourself. And this prevents building based on that formula because it's too long, it's too expensive, and guess what? At the end of the day, you can't do what you want to do if something happens along the way, i.e. there could be a seismic upgrade to the local code that you don't know about that as a result of an earthquake 5 years ago has taken over and is about to click in this January where you started your process to try to get your permit in August. Now all of a sudden it's January and you got to adhere to the new code. It slows down the process. This is what I'm trying to tell you. So if you're one of the people out there trying to buy a home, can't find a home, and are looking at prices $300,000 to $500,000 on the entry level, you know darn well that you have to have that $150,000 in order to get the mortgage, in order to get the house. Now, it's not easy. Everybody knows it's not easy. And one of the things that we're going to talk about today on the show is the rising interest rates, rising inflation. Two things that you don't want to have at the same time are things cost more and your money's worth less. But that is what's happening, and it's happening for a number of different macro reasons, and that's a national scale, whether it's Jerome Powell over at the Fed, whether it's Mulvaney over at the CFPB, whether it's Steve Mnuchin at Treasury. All of these people deal on the macro level with what's happening in the economy. And what is happening in the economy is that we're going to run probably anywhere from 2.5% GDP up to 3% GDP. And we have a number of people who are varying in their differences about how that's going to happen. What that really means, too, for you as an employer, is that you're going to pay more money for your employees. As an employee, you're going to make more money. We've already seen the effects of that in rising wages nationally, and locally we have a gap of skilled laborers in certain industries. Not to mention that those gaps will probably widen, and that obviously is going to drive prices and cost of labor up, which obviously is the inflation factor that we're talking about. Now, everybody wants to make more money. There's no question about it. I want to make more money. I want somebody to come on the show and sponsor it and give me X amount of $1,000 every month in order to do the show, in order to have me talk about real estate, talk about mortgages. Yeah, I want that too. But the downside is of course, when I'm getting paid more, somebody's got to pay for that. So that means that cost of goods, cost of services across the board are going to go up. I don't remember. 2 weeks ago I was reading, and next week we're going to have on the show the COO of Mortgage News, who we actually quote all the time, whether it's Jan Swanson or some of the other people who are from that great organization that give me all the information that I use each and every week on the show to supply to you. And of course, if you wanted to go there, go to Mortgage News, just type it in on your address bar, and up will pop several different home sites, web pages that you can go to. But Mortgage News is one of them, has a lot of great information. As I said, this information that I give to you is from that site. And he's the COO, and he's going to come on next week and talk about what his goal is for the site, what his goal is for the information. We try to bring that to you in a way that is obviously easy enough to understand, probably easy enough for me to understand. I'm the one who was trying to figure out whether whatever they're saying makes any sense to me. And if it makes sense to me, well, I know I've dumbed it down enough so it'll probably make sense to you too. And if it is too dumb, obviously there's CNBC. You can always go there, or Wall Street Journal, and all these other great sites and places that you can go to get terrific information about mortgages, real estate, finance, everything else in the business. So these things about housing, about inflation, about cost of product, cost of housing in the Inland Empire, all affect people in your group, the people who are listening to the show, people who want to buy a home. If you're a seller, it's great. Right now, it is about as good as it can get as a seller. You're seeing roughly 6.5% to 7% change in the cost of a house year to year in Southern California in the Inland Empire. Now, that's a sustainable, although right on the edge of sustainable. Obviously, if you're looking at 6-7%, every 7 to 10 years, you are doubling the price of your house. So that can't happen. You're not going to have a $700,000-$800,000 house today worth $1.4 million in 10 years. Where's everybody going to live? I mean, people just coming out of college, debt up to their ears, they're not going to be able to afford that. So what happens is that as we push from the ocean onto the inland side of the 15, right and left side, rising prices at the beach means that you're going to get rising prices inland as the further we get into the economic recovery. One thing I wanted to talk about right now is I just paid off my mortgage, okay, as a guy who's 63 years old, then living on the coast, and got into my house when there was an awful recession back in the 90s. Yeah, we just made our last payment. And one of the things about my last payment is I wanted a parade. I wanted somebody to just, toast me to the moon like, oh my gosh, you guys paid off your mortgage. Yeehaw. Well, it didn't happen like that. I called Chase up because I wanted to, I got the letter in the mail. It said, okay. And this is the other thing. They tell you at the beginning, anybody who just got a mortgage, you get this long list of 360 payments if you've got a fixed rate 30-year mortgage, which a lot of people do because that's what they like. They'll give you a list of payments that you're going to have for 360 dates right on down the line. You have to sign for it, right? Well, that's not it. At the end, you still got to pay, even though you've made the 360 payments. Now, granted, it was only another $102, but at the same time, I made my 360 payments. Anyway, so I called Chase. Chase told me, okay, no thank you, no, hey, thanks for paying your mortgage, good job through the recession, none of that. So they said, yeah, here's what you got to do. You got to go into your branch and pay with a check your last payment. I said, why? I've been paying online, automatic bill pay for how many years? And I can't do that for my last payment? No. So I'm thinking, like every other good, person who's been sold a bad used car, that the reason they want me in the branch is because they want to try to refinance me. Sure enough, go into the branch, sit down with the gal. The first thing out of her mouth was, not congratulations, you paid your last payment, good for you. She said, how come you don't want to make that money go to work for you? I said, oh, this is unbelievable. Not only did they catch me for 360 payments, now they want to catch me for another 360 payments. Anyway, mortgage is paid off. I made that last payment, and yes, we did toast each other when I got home that night with my wife. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Telephone number is 888-713-2929. Pick up the phone, give us a call. We're going to talk about mortgages. And we talk about mortgages each and every week. And what we do normally talk about is things that really affect decisions you're going to be making, whether you're going to buy or sell a house, whether you want to advise a friend, whether you're trying to get information because at some point in the near future or even in a year from now, you're going to want to get into the process of getting a mortgage, of buying some real estate, either for yourself, for your family, for your loved ones, for your kids, a long-term investment, a short-term flip. There are so many things that you're going to need a loan for that have to do with buying and selling real estate. The secret here is to know what to do, when to do it, and to act quickly when you make that decision. We try to bring that to you each and every week. Our email is info@malibufunding.net. We're on Facebook. We're certainly, we have a new, the show itself has a new website. It's called themortgagevoice.com, www, and I don't know why I say that, everybody knows that. Anyway, it's themortgagevoice.com, and you can see the show as well as hear the show. We're on iHeartRadio, a number of different ways to get and hear what we do each and every week. We do bring to the show terrific guests, people with knowledge, experience, and this next guest has been on the show before, is no exception, Josh Thompson from Malibu Funding. Very happy to have him back on the show. Josh, how are you?
I'm doing great, Jeff. How are you?
I'm just fine. Thank you very much. Okay, quick question from the top. Give me your top two non-QM lenders. And non-QM, of course, is outside the box, non-qualified mortgage, and everybody in this show who listens knows what that is. Do you have a top two, or do you just have horror stories?
Well, no. I have a top two now. I'm working with Angel Oak on some things. They have great programs with actually some of the best pricing I've seen on 12-month personal bank statement qualifiers.
Right.
And also, too, I've done, I just closed one with Citadel Servicing as well. And they have, in the non-QM realm, some great stuff, even on no doc, giving 30-year amortization loans with literally, showing no income. So, that's a good one there as well.
Okay, so these two different companies obviously having product. Are you seeing a move to try to open up mortgages to more non-QM people rather than in the past? You are.
Oh, yes. A lot of lenders I see now that didn't have these programs before are starting to offer them. So, I think everybody, kind of knows that, the self-employed client, there's a ton of self-employed people in this country that, in terms of qualifying, they don't really qualify on paper, but they have the income, the money is there, and they don't really default on loans. So there's a huge market for these people who are otherwise good borrowers aside from what they file on their tax return.
Now, are most of these non-QM loans, and the reason they don't default is because there's so much skin in the game, meaning that they have a good deal of equity in the property when they get the loan, like 25-30%?
Oh yeah, even sometimes more. I'm working on one right now. The value came in at $3 million. The loan amount is 1.3. So even if the guy does default, the lender is protected because there's enough equity there that if worst comes to worst, if they had to foreclose, they would be able to protect their investment. So it's a win-win for the lenders and for the borrowers all the way around.
Now, with these loans, I know mostly with Fannie Mae and Freddie Mac and Ginnie Mae products, obviously all of these get sold to the GSEs, the government-backed companies, Freddie, Fannie, and Ginnie. What happens to these loans once they're actually made? Do the companies themselves, like a Citadel or Angel Oak or any number of others that do these products, are they holding on to this paper or are they selling it off? What's happening in the secondary? Do you know?
Well, I believe on these bank statement loans and these non-QM products that a lot of the lenders are actually holding these,
Right.
or they may sell them to a servicer. But yeah, they're not. Those are not transferred on the secondary market. Those have to be Fannie and those Freddie products and even FHA.
Right.
But, yeah, a lot of these non-QM programs are portfolio products, and a lot of the lenders are now opening up their portfolio fund for these type of loans. So.
Yeah, I've heard, and this is one of the changes in the regulatory environment, they're trying to actually get QM status on what 3-4 years ago was non-QM, meaning that, based on the DTI, which that's the main element, they're trying to widen that so that it isn't hard and fast at 43 or 45%. They want to try to open it up so that you can get a QM product which may be above that. Have you heard that?
Oh, yes, I have heard about that. Yes, I have.
Okay, so in that way, we would get insured products through Fannie and Freddie and Ginnie, which would expand the DTI, which also helps. Obviously, anybody out there who's looking for a loan, somebody who may not necessarily be able to fit into the box, that's good news. And I think, if I'm not correct, a lot of the lenders out there who are merging, who are looking for an out, are doing so because business is down. Do you see that across the board just because of the lack of housing?
Oh, yeah. Yes. Yeah, business is definitely down, especially in Los Angeles County where I mostly operate in. The inventory is just so low. There's not enough housing out there for the demand. So, and especially in California in general, so many people are moving here in large numbers. So it makes it really competitive on the market, and it's tough for buyers to get in.
What are you doing for these people in terms of trying to get them the properties? Obviously, there's a pre-approval letter, but what else can you do to try to help them get a leg up on the competition in purchases?
I kind of pitch to some people that are interested in maybe, doing a fixer-upper or something like that. There's some great programs. There's, some properties that are sitting on the market for a rather long time that need significant repairs. You can even use an FHA 203K loan,
right?
Which is where you put down 3.5%, and they give you a secondary account of money to rehab the property. So that's something that I tell a lot of people to look into. If it's been sitting on the market for a while, you have a little bit more leverage to, kind of get in there with an offer that may not be looked at when something is fresh on the market.
Yeah, that's a great idea. I love the idea that if you are in a house and, you've been there a long time, probably need some updating, especially if you're nearing, 60, 65, maybe you want to scale down and you want to sell the house. Certainly fixing it up with a 203K is a pretty good idea.
Oh, yeah, definitely.
Let's move to the home prices. Obviously, we saw Southern California rise by 6.5%, let's say, to 7% last year. Sustainability in something like that is not possible. Where do you see happening on the horizon if we continue to get a rise in interest rates? Do you think the housing market will slow down, i.e. there'll be less people out there buying, so prices will become more stable?
I would want to see that.
Yeah.
But I just,
Me too. Yeah, I would too. Yeah, exactly right.
Yeah, I may be able to sleep better at night if I saw that. But, the thing is with just California and the demand being so high and the inventory so low, there's so many investors there, or even, I see a lot of hedge funds or things like that coming in and buying these properties all cash.
Yep.
So that scares me a little bit because I think that's really contributing to the rise in prices. And, it's not going to sustain because it's not based on anything other than, the inventory being so low. So, it's a tough one. I hope that I do see a correction soon because interest rates have gone up quite a bit, in this first quarter. But,
yes, they have. Yes, they have. And do you still see a lot of cash buyers as well? Foreign buyers out of state coming in to buy all cash?
Yeah, I am. I have a lot of purchase clients and realtors that I've been dealing with for the last 6 months, I would say. And, when they're bidding on something that is brand new on the market, they're getting overbid by, there's some properties that are getting 15 offers above asking.
Wow.
in the first week. So yeah, and sellers, I mean, I can't blame them. It's a seller's market.
Sure.
And, you want to, liquidate that asset the best you can. And, they're going to take a cash offer over a finance offer any day. But I would say that sellers, don't look down on finance offers. I mean, because these can close, just as quickly, not just as quickly all the time, but those can also close as well. But
yes, of course. Well, obviously, anybody that is out there getting cash, they don't have to wait. The seller doesn't have to wait for loan approval. They can waive contingencies a lot more quickly. And for somebody who needs to get into a property, who has to buy a house, that's a big leg up, I would imagine.
Yep. Yes, it is. Yes, it is.
Hey, Josh, could you shout out your phone number for people in case they want to get a hold of you?
Oh, yeah. My number is 323-945-5694.
Okay, that's terrific. And just one last question. What do you think the rates are going to do? 3-4 times raise this year?
I think so. It's making it tough on the refi business, but yeah, I think that they're going to continue to go up. I would suggest too to anyone out there that has an adjustable rate mortgage.
Yep.
I would definitely look into getting a 30-year fixed now. I mean, even if the rate is a bit higher than what you have on the ARM, once it goes live, then you can really, end up paying a lot more money once these rates continue to rise, as I anticipate they will.
Hey, Josh, thanks very much. Great information. I really appreciate you coming back on the show.
Awesome. Thank you for having me, Jeff.
And thank you very much. That's Josh Thompson from Malibu Funding, and I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. If you pick up the phone and give us a call, we can help you make decisions that you probably need information on. That's why you listen to the show. That's why we do what we do. We try to bring you topical and timely information. Mortgages are not simple. I mean, you may see ads on TV that says, if you just punch a few buttons on your phone, you can float around in the air. It's just not like that. And for those that think it is, they are selling you a bill of goods. And by the way, there is a bridge in Brooklyn. Kind of messed that up, didn't I? Anyway, I'm happy to be here with you and to talk to you about what we do and how we do it. We certainly want to be able to get information, as I said to you, in a timely way. And one of the ways that we try to do that is to bring terrific guests on the show. And Jamie's been on the show before. This is Jamie Knight from Blue Knight Agency. It's an agency down in Texas. They're a national group that brings information about how to use what we have today in today's world technologically, both online and offline, to you to bring your products and services to the market. Jamie, how are you?
I'm great, Jeff. Thanks for having me back.
And thank you very much for being on the air. Sorry about that long-winded and cumbersome intro, but sometimes it just comes out that way. I'm sorry. Okay, so I brought you on because it is that time of year where a lot of people are excited. New year, 2018, the economy is doing well. I want to start a business. I want to get into what I'm doing here in the Inland Empire, out in Las Vegas, up in Tahoe. I want to open a business, but I just don't know how I'm going to get to people who want to use my goods and services. You do that for me, and you do it in a great way. Explain a little bit about what you guys do and how you can help people.
So we have all of the staff members needed to be a full-service marketing agency. And when you're talking about that, you're talking about someone that does branding and can help you make your logos, come up with your slogans, come up with the look and the vibe of your business. But our lane that we really focus in is the same lane that I would recommend anybody thinking about starting a business definitely pays attention to, which is video, and video work.
Right.
This is what matters online right now. Whether you're doing a Google AdWords campaign and you're sending someone to a landing page to capture leads or to get them to sign up, there needs to be a video on your landing page. If you're doing any bit of social media, you need to have videos on your Instagram page, videos on your Facebook page. What we really specialize in is crafting these videos for businesses so that they constantly have quality, personalized content. You know, you see a lot of things right now online where it's like, making marketing videos is easy. Just grab our stock footage and put
Yep.
your text in, and that's a video. And it's better than nothing.
Right.
But it's much, much better because to let people know who you are and what you're doing. You know, the days of smoke and mirrors with online marketing and trying to trick people into seeing your message, that's really all gone. What
Right.
people want now is truth, and they want something real. And if you're starting a business, that means you've got a story. So share that story, and it's going to help get you business.
Now, the storytelling aspect of it, you've done some videos for me. Appreciate all the work that you do for us, trying to get who we are and what we do. Obviously, I'm a product myself in that I'm doing this show. And so using that element of what I have and bringing it to people in short 30-second to a minute videos is really the way that I present what I do, and you guys help me do that. If someone has no idea who they are and what they do, what do you do in order to help them get who they are and what they do, get to the element of it or get to the center of it, and then pass it on to people who would be interested in what they do?
Well, I think the easiest answer to that is to just break it down to the bare bones and look at what you're trying to do and the way your sales model works.
Mm-hmm.
Because if we're in business, that means we're in business because we're selling a product, a service, or an initiative, right?
Mm-hmm.
Let's say it's a nonprofit. So you have to think about who you want to get involved. And everything's going to sprout from that seed. So maybe you don't necessarily know what your message is or what type of visual you want, what colors you want on your website. All of that stuff will come once you think, okay, let's say I'm a roofing company, and I'm a roofing company that wants to do commercial roofs, and I want to do repairs more than I want to do installation.
Mm-hmm.
So then you kind of start to the picture starts to become a little more in focus. Like when you go to the eye doctor and they turn that little knob and it goes from focus to in-focus. It's the same thing when you start to do that process. You backtrack.
Right. That's interesting because I know that there are so many people who want to get involved who really just don't have the time. What kind of time element, what kind of costs are we talking about here? Is it vary based on the business, or do you have a way by which people can go online and just take a look at your menu of services? How does that all work?
So for us, we know that every business is completely different from the next.
Right.
You could be a termite control business down the street from another termite control business, and you're going to have, you're going to have similar things, obviously, but you're coming from a different place. And so you're going to have a different budget. You're going to have a different, all these little elements. So in generally, when we first start talking to a client, we just want to learn as much as we can about their goals. And then we use my partner and I have big backgrounds in building companies from scratch. And so we start to see some of the ways that we can use some of our plugins, videos, social media, websites to accomplish those goals. We have developed here something that's been wildly effective and is really catching on. It's a video marketing content package. Mm-hmm. So you might be able to run your own Facebook page, and especially if your budget is tight, then that would be something that you're like, well, I'm not going to farm that out. I'm going to do that myself.
Right.
But how are you going to make the content, right? So we have this package right now that we're doing, and it's about $1,000 a month, about $250 a week, and we make 8 minutes worth of video content for you that month. So that could be a 15-second video every single day. Mm-hmm. It could be a nice long video with some snippets. And then with that, we also distribute on Facebook and then another social media platform. So if you're business to business, we'll use LinkedIn. If you're business to consumer, we'll probably go Instagram.
Right.
Or something like that. So we really, our website is BlueKnightAgency.com. Knights with a K. That's my last name.
Uh-huh.
And on there you can check out video examples, and really the idea is that you just want fresh video content that's real and engaging. You don't want to trick people anymore. You want to give them something of value. And that's really what we like to focus on here.
So the presentation of you as a person or you as a business owner becomes more about, this not transparent, but I guess authentic is a word I would use. You want to see an authentic person talking to you about something that may have an interest, and that hopefully would be through their LinkedIn account or through their own social media accounts, right?
Yes, and I would say authentic is a great word, and I'm going to throw another A word there, which is authority.
Okay.
They want to know that if they're going to, let's think about your industry. If someone is interested in getting a mortgage and looking at refinancing or something like that, there are so many, pardon the term, but hacks, I guess. There's so many people out there that just charlatans. But if they sit down and they see you and they trust you and you know what you're talking about, then you become an authority. And people trust authorities and they want to do business with authority.
Do you think?
And if you have an authentic authority, then it's trouble.
Yeah. That brings up a question quickly. Do you think people want to be in a conversation, or do they want to listen to someone in more, like you were saying, in an authority, like someone telling them this is how to do it, or do they want to get into a conversation? And how do you deal with that in the media? How do you deal with that in the film, or do you not?
Well, I think I know what you're asking, and my answer is going to be all of the above.
Okay.
Because what works for one business might not necessarily work as well for another. So when you start off doing, let's say, a video marketing campaign, you want to do a little A/B testing. We actually call it A to Z testing because sometimes it's not just two options.
No, I understand. I know the A/B close. Everybody does in sales. You kidding?
Exactly. So, you might want to do a how-to video, and then you might want to do a testimonial video, and then you might want to do a frequently asked questions video, but then you might just want to do a video of you sitting on your lawn playing with your dog, and that shows that you're a real person, So you want to do a variety of things and see what's getting the most clicks, see what's getting the most engagement.
Okay, that's excellent. You know what? I really appreciate it. I always love hearing from people in your industry, especially you, because you give great information. It's succinct, and there are answers to people's questions, because this is a new world for many people, especially with the evolvement or the evolving nature of the way the internet goes and has gone.
Well, thanks, Jeff. And, one thing, too, about that is that it's changing so rapidly.
Yeah.
So my company's been, we've done a lot of things, but we've really been in this lane for maybe about 2 years.
Right.
So we've been focusing on video content and just how the algorithms, the Google algorithms, Facebook, pixels and remarketing, and all of these things are changing. It's a new landscape every 6 months.
Amazing.
So, I highly recommend that people, if they don't, if you have the budget, get somebody who's a pro, because you're a pro in your business. Get somebody who's a pro in theirs and trust them, find someone you trust. And if you can't afford that, just dig in and just learn as much as you can and keep up with the trends, because what was true a year ago is not necessarily true now.
Thank you, Jamie, for being on the show. Thanks for the information, and we will make sure that not only your great picture will appear on the website, but also the phone number as well. Thank you very much for coming on the show.
Yes, thank you.
And thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. If you pick up the phone and give me a call right now, we can get you on the air and I can talk to you about mortgages. We talk mortgages and real estates. That's all we do on the show. I had a friend of mine who was telling me, you know what? I can't believe you can talk that long about mortgages every single show. And I'm saying, well, with every mortgage, there's a story, and anybody out there who's listening to the show has a story about how they got their mortgage, how easy it was, how hard it is, the difficulty of finding real estate. In this market, really difficult to find real estate that you can afford, that you can get, and that there isn't 15 offers on it. So I know that there's tons of things to talk about, and so if you call me and we can talk a little bit about on air, off air, about what you want to talk about, it'll enhance the show and what we try to do. Email is info@malibufunding.net. We're on YouTube. We're on Facebook. My Twitter is @Jeff6493. All kinds of ways to get in touch with us. Main thing is trying to get a conversation with you, the listener, about what it is that is intriguing or interesting for you about what we do on air. We bring great guests to the show each and every week. And this is a first-time guest on the show from YSN Financial, Sandra Pugh Lee. Is that correct, Sandra? Did I get that right?
That's correct, Jeff.
All right. Yay, I got it right. Well, you know what?
Yep.
I really appreciate you coming on the show. I've known you for several years, and we've done some business in the past. But let the listeners know who you are, what you are, and where exactly you're doing most of your mortgage business.
My name is Sandra Lee, and I am in Inland Empire, actually in Rancho Cucamonga.
Uh-huh.
And we've been in the business for about 13 years, I guess. Yeah. So we are like me and my husband as a team. That my husband doing the real estate part, and I'm doing the mortgage.
How is the real estate market out there? Kind of tough, right?
It is, yeah. It's not that easy, but I wouldn't complain.
Right. Well, the prices are good, so that when deals close, obviously there's a nice payday for people, and that's always a good thing. But can the prices out in Rancho Cucamonga, can they go much higher? I mean, they're really up there.
It is, yeah. It is, especially Rancho Cucamonga. The price is really high, but I can see that it is still climbing because, especially like Rancho Cucamonga, El Paloma area has a very good school. So a lot of people that cannot afford in like LA area are moving inland, and then Rancho is like a area that where the family want to kind of settle in. So the market is still there, very high demand.
Yes, there is a high demand. How many offers are you getting per property, do you think?
Oh, we always have multiple property even for a listing, and then average turnaround is like maybe 2 weeks, and then we will be like in the contract already. So it is always a multiple offer, like at least 5 to 10 offers.
Well, you came through the poor times, right? You started your business a little before the recession started.
That's correct. Yes.
And so in the perspective that you have in your area, what do you think the price difference is today as it was at the low point? I mean, how much more do properties cost today than they did then?
Oh, now the prices now are like way above where it was in the peak time.
Right.
So like from the low point, I think it's already almost double now.
It's double.
Or maybe
okay.
Maybe 50% more at least.
Yeah, that's what the national average is. It's about a 50% rise in terms of what at the low point it is and what it is today.
That's
I just looked it up on Mortgage News. It's interesting because, you hear people and how awful it is, and it reminds me of those days. Do you think we're in trouble of repeating the same mistakes that we had in the past?
Well, that is a good question. I don't want to say there will be, but you never know. However, I don't think if the bubble got to burst somehow, and then the economic cycle is always like turning around. You cannot always go up. So at some point you have to come back down.
Right.
But it will not be as bad as before. I think that is my own prediction, because there are a lot of regulation in terms of the mortgage, people getting the mortgage. It's not like in the old days that everybody can just get a mortgage. So, like now it's more kind of like you see out a lot of people that the qualifications are harder. So it may not be as bad as before. That is my prediction.
Yeah, I agree with you. I think the front end of the mortgages are pretty tight, and that you and I, who are originators, really have to make sure that not only is the documentation, but the proof of the documentation, and then the requirements on the submission are quite a bit different than they were then. It used to be you could just sign your name and get a loan. That's not the way it is.
Exactly. Yeah. But I like it this way,
Well, it means we have a job tomorrow. It means that regardless of what happens.
Yeah, and we can sleep peacefully at night also.
Oh boy, I remember those days very well. When the problem is that if you didn't do the mortgage, the guy next door was going to do it, or the gal down the street was going to do it.
Exactly.
So
exactly. Yeah.
you were really forced into a situation where if you wanted to make a living, you had to make certain adjustments to how you did loans.
Yeah, that's right. Yeah. And now it's like not everybody can do the loans anymore, especially, the regulations and getting the license is so tough. I like it that, now only certain people, whoever knows what they are doing can be doing the mortgage.
No, I agree with you. I like the licensing very much. I like the fact that
Yeah.
there's classes that you need to take, there's requirements that you need to meet, there's background, there's credit, there's all kinds of things that a licensed loan officer has to do in order to be licensed and able to do loans. And they're very strict on that. And you as a broker, you know how strict it is. It's not simple to hire people. You have to make sure everybody has a license.
Exactly, yeah.
So tell me, there are a couple things that in order to get a loan, and everybody wants to know, okay, nobody wants to do over-regulation because, there's certain things that borrowers do want to tell you. There's certain things that borrowers don't want to tell you. What are some of the things that when you get into a process with a borrower that you tell them they have to do in order to work with you? Give me your ethical way that you deal with borrowers. What do you tell them? How do you approach your business?
Well, it's basically, especially doing the loan, that they have to be very transparent with their financial situation with me.
Right.
Sometimes they might have, their, let's say, child support or whatever they might not mention to you.
Right.
And then you will find out later. So those are the things that can kill the deal also. So I have to ask them upfront everything, like details. Sometimes you have to really get into their personal details that, which people normally do not want to tell you, but you have to ask them. And another thing with a lot of borrowers, sometimes it's like they have cash transactions. So we have to explain to them about how the lender see, the cash and then, all these transactions. So sometimes it is in certain culture that they will just spend the cash, put back the cash in, then, it is a very casual thing, but in the eyes of the lender, it's very different. That is the tough part or whatever. I'm always very upfront with them that what are the things that we will be asking and requiring them to, provide.
Now, when you do that approach, now I particularly like that approach, but as you said, culturally, some people don't like that approach because it's really it's considered either rude or it's considered crass or however you want to say it. But as a financial person, you have to ask these questions. Yeah. How is it received by most of your borrowers? Do they understand in the end that you have to know all this in order for them to get a loan?
Yes, in the end, they do understand, or maybe they just have to understand it,
Right.
But a lot of in the very beginning, when you first ask them, they will be shocked, I come across one time, I say, if you have money under your mattress, then they go, how do you know I have money under your mattress? I'm just saying, I don't
Oh, that's hysterical. So they actually did have money, but you were just saying it as a matter of,
Exactly.
Everybody says mattress money, and they don't mean you have mattress money, but apparently that particular borrower did. That's great.
So it's kind of, that these are the things that, I have to bring up very kind of openly and then tell them this is what can happen, You cannot just go dump your cash into the bank next day to go buy a house the following week,
Right.
So all these we have to explain to them why we have to ask all these and then why the cash is not acceptable in the eyes of the lender and stuff like that.
Absolutely.
So once they understand the why part, I think it is a little bit easier. But it is still not easy, because they still have sometimes the deposit, sometimes $200-$300. They think it's a small amount,
right.
But it is still we need to get documented, right?
Well, sure. If you're going to use it as part of your income, absolutely.
Yeah, exactly. So these are the little details that we have to look into before we even actually start as a loan, right?
Yes, ma'am. Hey, listen, we're up against the clock. I really appreciate you coming on the show. I want to do it again. It was painless, right? It was no problem.
Yeah, Yeah, easy.
Easy peasy. Okay, thank you very much. And this is from YSN Financial, Sandra Pugh Lee, and really appreciate you coming on the show.
Okay, thank you, Jeff.
And thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. This is The Mortgage Voice, the show it's on each and every week. Thank you for listening. Thank you for tuning in. We're on KCAA, KMET, The Roadrunner, and K-Tahoe, as well as we're on YouTube, and we've got our own website now, themortgagevoice.com, where you can see this show as well as the Las Vegas Real Estate Show, which we do each and every month. This show is each and every week. So thanks for tuning in and thanks for listening. We bring to you some information about mortgages. Yes, I know everyone can snore about the mortgages, but you know what? If you want one, if you need one, if you're going to buy a house, you probably need the information that's on this show. So we are timely in as much as if you're in need for a mortgage, yes, we can help you. The information and the people we bring to the show have the answers, whether it's an account executive, whether it's a non-traditional loan, whether it's a cookie cutter loan. We actually have people that come on the show. Today we've had some terrific people on the show. We've had real estate agents, mortgage agents. We've had people in the industry. Those are the people who day-to-day solve problems for people who need them solved. Most everybody isn't perfect, isn't a cookie cutter. If you're that person out there right now who's listening thinking, oh my gosh, I've got all this money, but I haven't yet put it in the bank. We had Sandra talking about mattress money to one of her clients. And lo and behold, the person said, how do you know I had money under my mattress? Which I thought was hysterical, but it is true. These things are around, these kind of stories, because you know what? A lot of people, that's the way they are. Depending on where you're from, I know people from certain countries around the world are so nervous that the government will come in and seize their bank accounts that they don't put money in a bank. I remember we had a friend, George Formansky, down in Argentina. This had to go back 15, 16 years ago when the government of Argentina actually nationalized all the banks and took all the money. He had his money in a bank, took it out beforehand, and then moved it to a foreign bank. And the reason he did that was exactly why people hold money in strange and unusual places. Your boot, your mattress, maybe in 2 or 3 checking accounts, which are obviously federally insured in the United States. But so if you have unusual things about yourself and about why you want to get a house, you know you can afford it, you know you have the money to put even 25, 30% down. How do you make that money so that it's useful? How do you, what they call, season that money? How do you take what you have in assets, turn them into a way that you can borrow against it and be able to go out there and get a mortgage? And a mortgage is really the gateway, the key to be able to get a house. Yes, there are people in certain markets around the country who can walk in and buy all cash. There's not a lot of first-time home buyers just out of college who are getting married and have a baby on the way that can afford all cash. They have other concerns. So there are more of those type of people than the all cash people. And by the way, there is still out there a number of homes which, believe it or not, are underwater. There is a thing called an NOD list, Notice of Default, and that you can actually go online and look for Notice of Defaults. Here's a tip for those people looking for deals. People that have homes that are late on their mortgages, 30, 60, 90 days. After a certain amount of times, 30, 60, depending on the lender, they will send out a thing called a notice of default, meaning that, hey, you haven't paid your mortgage, you need to pay the mortgage. That is public information. You can use that to try to find a deal. Obviously, people who are late on their mortgage are late for a reason. They're either in trouble or they need money for something else, maybe a health problem. Maybe you've been in that situation too. I know a lot of people who over the years have had health problems, and it's a question of, okay, do I pay for this health service or do I pay my mortgage? And obviously you're going to pay for the health service. So if you're in that boat and you've got an asset and your mortgage that you need to pay, but you can't pay it because of a medical condition, usually if you go to the lender, they'll try to help you a little bit. But if you're way beyond that and you need to sell a property, those people that see you on the NOD list might be calling. Why? Because everybody wants a deal, but at the same time, you do have an asset that's probably worth something. In this market where we have price appreciation going 6-7% a year. In some markets, as much as 13-14%. Las Vegas, Nevada last year was the fastest growing market in the country in terms of price appreciation, was up 13%. There are some other markets around the country that I want to bring Darryl in and ask him a couple of questions. These are state markets now.
Yeah.
We have 50. How many states do we have now?
50.
50, right?
50, and then a couple of territories.
Okay, very well. We're not going to get into the territories. I don't know anything about Guam, and I don't know anything about the BVI or the AVA or the whatever these Virgin Island places are. However, in the United States, within the continental United States, let's just deal with the continental.
Okay.
We have 5 states where price appreciations have topped, and this is month over month. So times 12 would be the year over year. Last month, 3.5% all the way up to 1.6%, which would be a huge 16% on a year-to-year basis. What are the 5 states? The top 5 states last month from the previous month in price appreciation.
So you're saying the prices are going up?
Yes.
And I would say it's because they were low in the first place.
No, not necessarily. This is just where the markets are hot currently and where prices are appreciating more than other places.
I'd say California's on the list.
California is not on the list.
It's not. What about Florida?
Florida is not on the list.
Nevada.
Nevada is number 2 on the list.
Okay.
Ding, ding, ding. Went up almost 0.8%, which if you extrapolate that, it went 13% last year. So this year would be about 10%, which is still an unsustainable number, but Nevada was really down.
Yeah. What about Oregon?
Oregon is not on the list.
Okay.
Well, some of the states that you would consider on the list that you might not think about, a place like South Carolina.
South Carolina has got just a big boon in industry there. A lot of businesses are going there.
You know what? I love the Carolinas. I don't like the politics of the Carolina. I don't live there, but it's a beautiful place. I have nieces that live in South Carolina and North Carolina. We have a real estate agent and a loan officer for Malibu Funding out there in North Carolina, Maggie Miller.
And you've got one in Atlanta as well.
Yes, we do. Yeah. Okay, and a couple other states on the list, Georgia, New York, and Colorado.
Okay.
New York itself went up 1.6% last month from the previous month. That's insane.
Well, when you think about New York, you can't really think about Manhattan because, people stand in line for years to even rent or lease or own in Manhattan.
My brother sold a house. Took him, in most places in New York City, if you're going to buy or sell, are co-ops, which is a different animal altogether.
Right. So you have to consider upstate or Long Island or...
Yeah, this is the whole state, right? So obviously a place like Buffalo, a place like Elmira or Schenectady or, any of these other states, cities upstate, all these places are obviously appreciating huge.
Yeah, spend some time in Binghamton. That's in that area, pretty nice.
I know the Triple Cities.
Yeah.
I don't know. Everybody out there who's listening is going, the Triple Cities. Yeah. Binghamton, Vestal, and Ithaca. Those are the Triple Cities. Ithaca College is out there, and of course, in Ithaca, New York, that's where Cornell is. So anybody who's wanting to go to school out there, beautiful place. I went to Elmira myself, which is an hour down the road, but I love upstate New York. It's wide open, it's rural, and it's very conservative.
And I have no idea how those ducks were swimming on a frozen river, but they were
exactly
they
right.
were doing it.
Okay, so if you're thinking about buying in another place other than California, Malibu Funding, which sponsors the show, which I happen to own, and their particular NMLS number is 79620. If you're out there and you're wanting to know that kind of information, understand that in the 10 states, of those 5 states that we mentioned where prices are appreciating, Malibu Funding is in Nevada, Georgia. So if you're thinking about moving to states and you want to know something about those states in terms of the mortgages, mortgage rates aren't the same in every state. There are certain programs here in California which will help in terms of the affordability, like the CalHAFA program. We talked a lot about that. Or if you're talking nationally, there's a program for Fannie Mae called the Home Ready program, which allows a conventional mortgage to only put 3.5% down, which is much like what they have for FHA products for Ginnie Mae, and that's a 3.5%. But for a conventional product, the Home Ready program, and that's really good. We're going to have a guy on next week who's going to talk a little bit about the Home Ready program. He's been on the show before too, and I really appreciate the information like that on the show, because you know what? When you're going to different places and you're trying to afford a property, you really know what to really know what the local programs are. You got to talk to somebody who's doing loans in those areas. Jan Swanson wrote a really interesting article. Once again, I really appreciate Jan and all the work she does for us in terms of delivering information. I've asked her on the show. I haven't heard back, but
once you talk to her, you talk to her boss on the air.
I know. I'm going to say, hey, you know
she's
what?
Going to return your calls.
Exactly. That's next week on the show. We're going to have Matt on. Really appreciate him doing that. She writes, it was a nice ride while it lasted, but the long run of historically low mortgage rates is clearly coming to an end. Now, we've been prophesizing about this for years, actually, and it's actually happening. She goes through a great historical analysis of 1981 prices where 18% was your mortgage rate. So if you're thinking the mortgage rates today are way too high at 4.5% to 4.875%, think again, 18%, and inflation was running at 18%. Yeah, those were not easy days, right?
Some people were happy.
Well, they could, it's funny because they go through the volume of the amount of loans that they were making, and obviously 81 is not 2018, but the volume wasn't low.
No.
There were a lot of loans being done, whether it was on a interim 5/1 ARM or whether it was some kind of interest-only product or whether it's just 30-year fixed. They were doing loans.
401ks were looking sweet.
So were CDs.
Yeah.
CDs were 18%.
Hey, you're making money on your checking and your savings account at the time,
At
too.
5%
Yeah.
passport savings. I remember it well. Hey, Daryl, thanks for jumping in. I really appreciate it.
Pleasure.
I'm Jeff Barton. I really appreciate everybody listening to the show each and every week, and we'll be on next week as well. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.